Hey everyone, welcome back to the channel. Today we're breaking down the latest price action on the S&P 500 ETF SPY, and what a day it's been. Everyone in the Discord is asking, is this going to be a true V-bottom recovery with new all-time highs incoming, or just another bull trap? We're going to walk through all the key levels, strategies, and setups you need to watch, especially our 15-minute opening range breakout strategy. So stay tuned. The SPY put on a familiar 3:30 p.m. face-ripping rally today, but despite the late-day surge, it was unable to take out the overnight highs around 563.80. This marks the second rejection at that level in less than 24 hours and suggests sellers are defending that region with conviction. On the intraday 30-minute chart, price continues to trade within a sideways congestion zone, pinned between rising moving averages and overhead resistance. The daily chart shows price struggling beneath the 200-day moving average at 570, while the MACD has begun to flatten, hinting at slowing momentum. Meanwhile, the RSI remains elevated but has not broken out, yet indicating indecision. Until the 564 level is taken out with authority, upside remains capped. In just 8 weeks, we saw sellers step in and were able to drop SPY down more than 21%. But since the April 7th lows, SPY bulls have clawed back 15% of that 21% drop. So the question remains, did the bulls run out of steam? Or is this just the calm before another face-ripping rally? Let's dive in and see what the charts are trying to tell us. A break below 557 could open the door for a quick flush to 555 and potentially even the rising 20-day moving average as support at 550. Where we see confluence from a rising channel and prior demand. Bulls will need a strong gap and go above 564.75 to trigger fresh upside toward 570 and beyond. But with today's failure to take out highs despite the intraday squeeze, the burden of proof is back on the bulls. Like, subscribe, and hit that bell if you want smart, real-time market insights every time we post a new video. Let's dive in. Tomorrow morning's SPY open is shaping up to be a tension point, and the key lies in how price behaves relative to the 561.50 to 562 zone and the 30-minute opening range. Here's how I'd play it. If SPY gaps up and breaks above 562.80 to 563, I'd wait for a 15-minute opening range to confirm strength. If the range resolves to the upside, I'd look to scalp calls targeting 564.75, and if that breaks, we could squeeze quickly into 566.67 and possibly 568.37, where supply has capped recent rallies. Stop would be just below the OR low or a break below 561. However, if SPY opens flat or slightly red and breaks below 558.89, I'd favor puts, especially if the first 15-minute candle is weak or resolves lower. That would put 555.75 in play as the first target, with a high probability retest of 553 to 554 range if sellers press. I'd only short if the breakdown comes with volume and price rejects attempts to reclaim the OR midpoint. One wild card. If we open inside a tight coil between 559.50 to 561.50, I'd stay hands-off for the first 15 minutes. Let the range form and then trade the break with clear confirmation. So while the intraday bounce is strong, bulls need to clear and close above 566.70 for this to flip into a bullish continuation setup. If you want to get an instant notification when our trading deal loads calls or puts, tap the Patreon link in the description to get our highly selective options trades in real time. This was one of those days where discipline made all the difference. If you nailed the bounce, congrats. But now it's time to stay sharp. Remember, big moves get retraced if sentiment shifts fast. Protect your gains and plan every entry with risk defined. Drop a comment. Do you think this was a reversal or just the market playing games before another drop? And don't forget to check out the link in the pinned comment to join our private trading group, where we crush SPY and others on a daily basis.